is a must.
lives in a blue world, and all day and all night, and everything he sees is just blue.
All right, guys, what is going on? Hello, and welcome to the stream. Welcome, everybody. Welcome. We got a whopping 23 people on here, dude. Fuck. Where you guys at, dog? Where you guys at? Where is everybody? We got a few of you on time today. All of you like to be late for some reason. What's up with that? What is up with that, chat? Ricky's making a fat steak. Dude, you got to post that. You got to post that on IG and let me know. Or not let me know, but like, I want to see that. Love me some steak. Know what I'm saying? So yeah. What's good? 2020 Jordan D. Bitcoin still flying. Yeah, that's not a surprise. What's good? Mason, Naruto, Ebernith. And yeah, the dollar's flying too. You know, I wonder who talked about the 106.52 level. I don't know. Maybe somebody. Maybe somebody. I don't know. Somebody knows. Let me see who else is here. Ray, Mr. Young, Toby, Charlie, Amin, NKM, Jackson, AK-47 with the scope trade. What the fuck? That's a nice name. That was a nice name. Who did I forget? Natasha, Marvelous, Martin, Naruto, Josh, Dave G. Is there anybody else that I missed? Welcome. You know what? I'm glad you brought up dollar. Maybe we can watch that. Hit the rally button real quick. Maybe we can watch that. Hit the rally button early on in the stream, which is good because I don't have shit for the indices. We might get the 40s for ES. I'll talk about that in a minute. But I'm done for the day. I definitely don't want to push any more buttons today. ES was enough. And I'll get to that in a minute too. But what are you guys thinking, man? You know, I went on Twitter, dude, and a lot of big names out there. Oh, today's high resistant. Today's sucks. Today's worst CPI day. Blah, blah, blah. So you already know, dog. Stunting in low probability conditions, right? Because today was beautiful. The fuck you mean? Oh, today's not this, today's not that. No, you're just ass. You're just ass. It's okay. It's okay. Sometimes I'm ass too. Sometimes I'm not that great. I get it. But to say a clean day is dirty, yeah, that's just L, bro. That's just nonsense. That's just nonsensical irrationality. That tweet feature on TradingView is awesome. Yes, it is. I did not wake up on time today, so I did not give out ES in advance. You know, you're not promised, you know, stuff like what I said last night as I was falling asleep about Dow Jones. I said 40, I think it was 43,800 would be on my radar for tomorrow. I'll talk about that too. You know, obviously I was wrong about that, and that's part of why I traded ES. In that regard. But yeah, I did not wake up on time enough for the low risk buy or the first stage accumulation, so I had to play a late second stage accumulation, which it did expose a little bit more of risk, but I was like, nah, those low resistant highs are getting tagged, and that's just what's gonna happen, and I don't see it any other way. So that's what I went with. But yeah, if I woke up on time today, oh man, I would have made today. I would have fucking did so much better. But you know, I stayed up too late last night, and that's what I get. That's what I get, chat. That's what you get for being undisciplined. So drop a like if you're disciplined. Drop a like if you're a disciplined trader or you are becoming a disciplined trader. Do that. I would greatly appreciate it. Yep, hit the like button or you're banned. That's you know what, Martin? Like, let's do that. Let's be a totalitarian today. Let's be a dictator today. Drop a like or you're getting fucking banned. I'll ban all of you. I'll just stream to myself. Ricky, I don't even know how to say what you just said, but I'll put it on a t-shirt. I'll put your ban on a t-shirt too. You know what I mean? Can you please go over the market maker buy model for ES? I was hesitant to enter because NQ created low resistant lows. Okay. And was a few ticks away from sweeping yesterday's daily low. But yeah, today was great, offered both downside and upside. Wow, we went to 516. Dollars on that bullshit for now. We'll see. I feel like your sleep schedule, a top 5 thing you got to stay consistent on. It can be tough. I agree. What's good, Stephanie? What's good, Wes? What's popping? What's popping is ES. You know what I mean? And the only reason I said we could get to the 40s today. The 40s. Number one, it's only about 9 points away from where we are right now. On top of the equal highs that were set on an intraday basis on Monday. All right, so yesterday's high is here, 36.5. That looks like a likely candidate to get yoinked. And how far can price go above a high? Likely an imbalance. Do we really have one on the 15-minute time frame and the 1 hour time frame? Not really. So what would be the furthest extension? To be fair, I don't know. I don't think we would stop at that high. If we're going to reach liquidity above that, then we might as well go for the liquidity at 39.5, 43.5, and if need be, maybe all-time highs. I think that's a little overzealous. I think that's too much to ask for. I wouldn't ask for that. I'm not in a trade anymore, by the way. I'm already done with this. But yeah, today was beautiful. This was textbook, man. And that's what I don't understand. Like, I don't like talking shit all the time, you know what I mean? And I'm not gonna say that I'm the greatest educator in the world or, you know, anything like that. But it's like, bro, if you're a teacher, right? And you teach these kinds of things, smart money concepts or whatever, and then you come out on a clean day and you're like, oh, today sucks. I don't know, man. It's like, I don't know. That's just kind of like a doctor saying, hey, I'll perform surgery on you, but, you know, I don't really know what I'm doing. You know? Like, that's kind of the sense that I'm getting out of that. It's like, you're a teacher, you're an educator, but today was not clean. I don't know. You're just a goober, in my opinion. That's just me, okay? But nonetheless, we'll get into it. So we'll start with Dow, which we just actually created equal highs too, by the way. Ooh. Hive day might not be done yet. Hive day might not be done yet. Okay. 43,800. That was a level, again, I mentioned in the Discord probably about 10 or 11 hours ago. Or no, 13 hours ago, excuse me. Quick math. Right before I went to sleep, I was like, yeah, 43,800, that seems likely. That is equal lows from November the 7th. Okay, right here. See that? So we got really close to that last night. I'm like, okay, that might be on the table for tomorrow. And of course, you know, I'm not always right. There's always the chance that I could be wrong. And then I totally, you know, when you're half asleep, you can't like think straight. So I didn't even consider the fact that we had CPI the next day. So it's not a surprise. And my ego is not hurt because we didn't get that level that I outlined. You know, CPI could have easily ran down there, but I would have still told you like, oh, I forgot there was CPI. It makes sense that we traded down there, right? But CPI isn't, for me, CPI is not always predictable. So it could have went down here. It did not. It obviously went higher instead. And that's fine. So if we're not going to go lower and we're going to go higher instead, okay, wonderful. Do we have any indices that have high probability targets? Yeah, 6,020. That's not only low resistant highs, but that's a 20 level as well. That's an easy upside objective. And if we're going to go clear highs, what are we going to do first? Probably clear a low or multiple lows. Right? The market typically goes lower before it goes higher, right? Yeah. So 7:30 Central Time, that was CPI, wasn't it? Yes. Data, we'll do data low, 601 and a half. Now, one of you sent a chart either to me or to the Discord. I don't remember. Please don't send me shit, okay? Send it to the Discord. Because if you send it just to me, nobody else gets value except for you. So don't be selfish. Okay. 740, we make a high and then we trade lower. So although 740 isn't exactly the high of the data release, it's the high that is formed right after. Meaning like 730, we trade higher, but then we hit the reversal button and go lower. So you got to think, who's in profit? We'll look at it, okay? Before CPI is here, right? So with something like this, I have no idea what's going to happen. I would have assumed we would just go right for the low first. I would have been wrong. So you got to wait. It's like, okay, well, what happens? CPI rips higher. Okay, beautiful. The market's up 28, 29 points or, you know, something like that. Okay, cool. So anybody who bought in or during London or any retracements in here, or maybe you thought this was a mitigation model or something, which it's close, but I don't think so. In either way, somebody's trading. Okay. So it's like, all right, boom, market rallies higher. Anybody who's been long is in open profit. We make that short-term high here, and then the market trades lower. So if there's trading going on at the highs, right, that means somebody's probably shorting up here. So when the market trades a little bit lower, where their stops at, they're going to be at that high. So trading right near the middle, okay, of the data low, the data high, or it's like slightly after, right? It's like, okay, what is likely to go on here? I don't know. If we're in between two levels of liquidity, I don't know which one's going to be tagged first. Sometimes I'll guess, but I'm usually wrong in that assumption, which is why I just always wait. Just wait and then see what happens. Right? So, okay, 8:30, our equity's open is here. Cool. What do? It rallies a little bit, doesn't take that high, and then drops down. Okay? And look at that 905 candle. Look at that wick here. It doesn't just take the data lows. It goes for the data low. It goes for whatever low this is, like a pre-market low. And then it goes all the way for London's lows here, I guess. It takes that, it takes that, it takes that, and it takes that, all right here. Right? So, but remember, look at it. If we have a data high up here and low resistance highs, and we just sweat all of it. Look at that wick, right? Look at this 5-minute candle. It opened 604 in whatever, drops all the way down to 59.92, and then rallies all the way back to 6,002 in 5 minutes. In 5 minutes, we just hit the whoop-de-whoop. What does that tell you? That long ass wick like that below an old low, that's manipulation. What's after manipulation, chat? What comes after manipulation? There's like 2 answers that I deem acceptable. What comes after manipulation? Well, okay, so Marco, the Y-Slime model is manipulation. What comes after that? That's going to be your low risk buy, or if you're looking at a little bit of a higher time frame, the NCE, the next candle entry. Right. So do we have equal highs / consolidation? Do we have that? Do we have a, I know it's cut right here. I blew the camera up, but the, higher time frame concept, or at least a previous session low, something to that effect. After manipulation, for those that are taking notes, after manipulation is either the low risk buy and or the NCE, the next candle entry. If you're not familiar with that, it's a concept that I really haven't seen too many people teach it. To be fair, I don't want to say that I created it, because it's rather arrogant to say like, oh, I created this or I created that. So I don't really know exactly where it's from, but it was a phenomenon that I started to see when I first started to know about market manipulation. I always noticed after manipulation, price never comes back to the low. And what I used to do was, and again, this was like 5 or 6 years ago. This was a long time ago. I used to ask myself, like, well, where am I supposed to get in if there's no available entry? Now that was, I was not very smart back then. So, it wasn't like, oh, just go down to the smaller time frames or, look at session opens and all this shit. And that was one of the things I noticed. I was like, well, if the best trades occur right after manipulation, then why not just enter at the open of the candle that everybody else got knocked out? Like everybody else got knocked out here. So after everybody's out, why not just enter on the next candle? Whether it be the 5-minute or like this is around 9:10. So what's at 9:15? That's the next 15-minute candle. You see what I'm saying? So look at the logic behind that. 15-minute time frame, everybody gets yoinked. Okay, wait till 9:15. It's a time-based entry, which I don't see a lot of that either. There's no concept there. What's it trading down into? I don't fucking know. Because there's nothing there on a 15-minute time frame other than the fact that we just had manipulation. Sure, there might be some inversion or some shit over here, but if that's manipulation, then we disrespected whatever, any type of inverted concepts. So it's like, what else is there then? It's just the open of the next candle. And it trades down a little bit. You could wait for like 1 or 2 ticks lower and then long that bitch. right? Where does that come from? This is every time frame. This is the 1 minute, this is the 5 minute, this is the weekly, this is the yearly, this is any time frame that you can possibly imagine. On a bullish candle, when is the best long? It's below the open of the candle, right? You can get in later, of course, but I'm just saying the best opportunity is going to be below the open of the candle. So manipulation, next candle, if we're going to expect expansion, then you just simply wait till 9:15. That candle opens, trades lower a little bit, boom. You just long that bitch. Would stop at this low or a little bit above it if you're trying to like minimize it. Okay. I'll give you a new stop loss too. I now, before you start to do this, I don't do this. Okay. But if you want something to study, you could put your stop loss at the halfway point of that wick. Okay. So look at that. I gave you some new shit today. Unless I taught you that before. I honestly don't remember. Obviously, with everything that I know, and I don't have any notes in front of me, I wrote down a list of philosophers here, but that's the only notes I have in front of me. It's just a list of names. So I don't know if I taught you that before, but if you're trying to be cheeky, your stop can go to the halfway point of the wick or just below that. Again, I don't usually do that. I think it's, you'll see instances where that will not do well for you. But if your stop goes to manipulation low, if you can weather something like that, then that's where it can go. All right. But anyway, the whole point is next candle entry on a 15-minute time frame, or even that 5-minute time frame, it really wouldn't have made all that much of a difference. It's just the 9:15. You probably would have spent a little bit less time in drawdown. Okay. So that 15-minute, here's 9:15, right? And it trades lower. And then even like that 9:20 drops a little bit lower too. That's that wick on the 15-minute. And that, my friends, is what the low risk buy is. Right here. Do you see what I'm saying? Okay, let me pull this up again. We're going to take that off. We're going to pull this up again. Okay. We're going to take a look at this. Okay. We're going to take a look at the sell side of the curve and the buy side of the curve. That's what's important. Well, all of it's important, but for what I feel like talking about today, that's what we're going to go with. This is our target and possibly above that. Okay. We're looking for levels of distribution that will become accumulation on the buy side, right? Sell side price delivery, buy side price delivery. So again, right after manipulation comes the low risk buy, which is right there. See this? That little dip right there. It's just an image, but it's a depiction of you're buying on the way down in a bull market, a potential bull market, obviously, because this side of the curve has not panned out yet. But that's what you're assuming. You're assuming, okay, we got manipulation. Now I'm going to look for low risk buys or somewhere in the first stage or first leg of accumulation. That is here. Because remember, all of these lows were taken with this run right here. Now you can mark up the old low. Since this one is London's low, what I'm going to do is extend this one. It just makes the chart a little bit cleaner versus having just a little bit of a smaller box that represents manipulation. Okay? So don't get confused. What I believe is the manipulation is there. The below the lowest of the low is right there. But what I'm saying is I'm going to draw it from here because visually, that is a low, that is manipulation, but visually it's a little bit more appealing and it's a little bit more clean to look at. Okay. And yes, Mason, you answered your own question. The divergence, yes, because Dow was higher while ES was lower. So yes. All right. Do we have consolidation? What are we at? The 32? Okay. The do we have original consolidation? Yeah, it's right there. Right? And price left that consolidation, traded back into it to run lower. That's a beautiful signature of price delivery. Okay? It doesn't always have to do that, but it's really nice when it does revisit the consolidation and then leave it very aggressively. That's very, very good. Okay? Now, these are all exercises that you have done before, by the way. You know? Or neglected to do. Do we have consolidation? Yes. Do we have a level of distribution? Yes. Now, this sort of overlaps that. And that's okay. You know, again, I say this all the time. It's not going to be picture perfect. You know, it's not like we can come in here and Photoshop some shit. Okay. These up candles on a 1 minute time frame, excuse me. I thought it was the 5. Those up candles here got traded through at 901. We stab into it, into them here, and we actually hit that gap too. Look at that. So these levels here were utilized to go lower. We created a imbalance on the way down to manipulation, which is almost always the case. And I'll get to NQ in a minute. Just let me teach before you sidetrack me. Do we have an imbalance on the way to a liquidity run? Yes, it's right there. Okay. So what could we possibly expect moving forward? And you already know it trades higher. Okay. Obviously. But when price is doing this and you're watching it, you're going, oh shit, right? You got to know what to anticipate. So what is likely to happen? Well, if this is going to be a buy model, then manipulation is here. Okay, then that means we need to anticipate the low risk buy if it's going to form, right? Every once in a while it won't, but usually it will. Okay, so at 9:09 a.m., that is your shift in price delivery. What the fuck? Shift in price delivery? Hold on, bro. That doesn't make sense. What do you mean? The structure's up here. The structure's up here. Right. I'm not looking to break a structure. I'm looking at shifts in price delivery. And there's multiple ways to do that. There's 2. One of them, sure, is look at the structure. Yeah. Oh, everybody likes structure for some reason. Okay. But that's like kindergartner level of understanding. That's like intro to price structure or shift in price delivery, whatever. Everybody knows structure, but not everybody knows about imbalances or even inverted imbalances. When a imbalance gets ripped through, that's a shift in price delivery. I know, Jordan, I clown break a structure all the time. I did make one video on break a structure. I was like, never get break a structure wrong again. But I have other videos that are like, you don't need break a structure. And I say that all the time. What you do need is some shit like this. Okay. That was the imbalance created on the way to a liquidity run that just immediately got disrespected. There's your shift. Okay. We're bullish now. As soon as I wasn't up for this, but as soon as I see that, when I'm looking at the lows, how were the lows created? When were they created? That's 907. Oh, what? What the fuck? 907. Right. There's your 850 to 910 macro. Ooh, yeah, we love those, right? We love those macros, don't we? Starting to come together, isn't it, for you? Chat. Starting to come together now. Our 9 a.m. macro delivered where? Oh, yeah. Yeah, wait. I know you said this time and time again. You said that a macro will typically deliver to an imbalance or to liquidity. So our 9 o'clock did what? Jordan, remember yesterday? What you asked me that question and I was like, I don't know. I didn't study it enough to give you a straight answer, right? So here's our study for today. What's the low of the day? 9 a.m. macro. Post 9 o'clock. After the open of the hour. Yep. Swept liquidity during the 9 a.m. macro. Exactly. All right, moving on. What's going on here? We traded back into these up candles. Have we traded through that yet? No. There's a little bit of sensitivity there. Okay. Well, that's not a super big deal. But you see that it was pretty fast to go higher. And it's like a little bit reluctant to go lower. And then here's 915. So 915 or 914, excuse me. And then 915 starts. So there's your next 15-minute candle. So at 915, if we're going on that 15-minute candle, if we're going to do, pull this up again. If we're going to do this, right? That means 913, 914, 915. Okay, we should trade lower if we're going to expand higher. Okay. What is there anything down here that we could anticipate price to run into? Well, remember we have our inversion here. But what else do we have here? And it keeps sending it in front. That's starting to really, I don't know why TradingView does that shit now. It's always something, dude. You can't ever just have a perfect trading view. You know what I mean? Like, fuck. Anyway, you have a bullish imbalance right there, right? Because you had an imbalance on the way lower. You had an imbalance on the way higher. Now pay attention here. That is your first imbalance created in the opposing direction. What does that mean? What are the qualities of the first imbalance created in a price run? Meaning, we'll zoom out. Meaning, we have low resistance highs. We just took liquidity. And this was our first imbalance that was created on the way towards low resistance highs. What are some qualities of that first imbalance? Bruce said it's large and a breakaway potentially. Well, in this particular case, size doesn't matter. But I do like the breakaway potentially part of what you said. Does anybody else have a answer for that? Keep it professional. We're keeping the chat professional. I know I cuss a lot, but, you know, work with me, Bruce. Work with me. Overlaps with the inversion. It does here. Not what I was looking for. Discount imbalance. You are correct, but that's not what I was looking for. It's the quality of that specific imbalance, my friends. Of that one right there. Bodies respecting the higher one. Not right here. Though that got disrespected there. Before I tell you guys, I know I told you this before. It's bullish as the body respects the 50%. You guys make me sick. You guys disgust me. Okay. Now this was a screenshot I did earlier, so I'm just going to take the lazy way. For your notes, since none of you got it. Y'all, I swear, man, fuck. The first imbalance after manipulation. This is my observation. Either one of two things is going to happen. Maybe three, but typically two. The first imbalance after manipulation is either going to be a breakaway imbalance, like Bruce said. A breakaway imbalance is an imbalance that does not get traded into, which we really don't have any here. Okay, I lied. We do. This one. You see this right here? This was an imbalance that price did not trade into, but it still ran lower. And it didn't even trade into that here either. That is a breakaway imbalance. Okay? It never got traded into until obviously later. The low risk buy, right? That first imbalance created in the opposing direction is either going to be one, a breakaway imbalance, which means it doesn't even get traded into, or number two, what I would expect is for that imbalance to not be quote unquote filled in, meaning it usually will not trade to the low end. Did you hear me? It's either going to not tag it at all, or price will tag it, but it will not trade to the low end of it. Now, the only reason I say there's a third option is because every once in a while I'll see where it does hit the low end, but the bodies will respect it. But that's not what you want to see. This right here is ideal. This right here is ideal. Why would I say that? Short-term lows taken, first imbalance, and the bottom half remains open. Actually, about 75% of it, 80% of it stays open. If the lower half stays open, or if there's a smaller, let's say bottom 25%, if that stays open, that is absolutely a signature that we are bullish. Okay? So notice that. We didn't trade into the inversion. Okay? We didn't get there. We did get into this imbalance, which also overlaps with 6,001 and a quarter, which was what? The data low. So there's an overlap of the old data low, or previous data low. It's not old, it's only like 2 hours ago. But previous data low, first imbalance after manipulation that formed in the direction of opposing liquidity. That's your low risk buy right there. Well, John, what if I don't get that? What if I don't get that? What if I'm scared? Don't be scared. Okay? It says in the Bible 365 times, do not be afraid. So, there you go. What if I can't get that, John? What if I don't get that beautiful entry? Okay, well, then you can get the next down candle, which is here. Right there. Or this one, right? Trades through these two down candles here. You could get in right there. It's kind of a shit entry, but it's available. Okay. Market trades up, and it actually does trade through these up candles here. We trade back down. Does price ever go back into that imbalance? No. That's a scary retracement, about 10 points or so. That kind of sucks. But Does it ever go to this entry here? No. Does it go to that imbalance? No. It rallies off of that instead. That's bullish. Okay. What takes place? We trade through at 955. We trade through these candles that were utilized for shorts in here. Okay. So what can we anticipate next? Think about it. If price comes back in here, okay, what can we anticipate? A run higher. Whoop. There's your second leg. Low risk buy. First stage accumulation. Meaning that is your market maker buy model. Here's your sell side of the curve. There's your buy side. Okay. Manipulation. Low risk buy and first stage accumulation. This is your second stage accumulation to go higher. So what part of that is low probability conditions? Because that I don't understand. I don't understand that at all. A run to low resistance highs is high probability conditions. So that makes no fucking sense. How far can price go above the equal highs? Or low resistance highs, excuse me. We have a data high here. Well, John, how did you know that? Oh, I didn't. I didn't know that. But you know what? If you go look in the Discord, the very first screenshot or the second screenshot that I posted right after we got these highs, what did it have on there? That blue line, didn't it? Why would I put a line up there? Because I'd want to know if we made a new high of day. See how that works? And look where we are now. Drifting a little bit higher. But that is your market maker buy model. Didn't we have a buy model yesterday? We watched that on stream. Remember that? We didn't do that today. Well, shit, dude. This was at like 10 o'clock today. What do you want me to do? What do you want me to do? So that's what that looks like. You guys good with that? If we're going to go higher, we're going to go lower first. You can buy below old lows. You can. But again, I don't usually do that anymore. On an inner range, yes, I'll do that. But if I'm like, oh, this is going to be the manipulation of the buy model or the sell model, if I want to be short, I usually don't do that. I'll wait for a low risk buy. Okay. If we go to a 5-minute time frame, things are going to look a little bit different. Okay. But there is a reason that I marked up the 1 minute and now we're going to do the 5-minute. So what we're going to do is take off some of these drawings in here because we're going to redefine the reaccumulation. The 1 minute reaccumulation is 608 or 6008 to 6014, rounding up. But on a 5-minute, it's a little bit different. On a 5-minute, it's a little bit different. Your up candles are there. And this one that was, I can't tell if that was utilized or not, but that was part of the original consolidation. You have that here too. Okay. Now, what I'm going to do is actually make this darker so we could differentiate the two because that looks a little bit crazy. All right. So check this out. Old levels of distribution on the sell side of the curve, what do they become on the buy side of the curve? Old distribution becomes either accumulation or reaccumulation. So you see how these up candles didn't get traded through on the 5-minute until here at 9:55. And then you can see that what price, even though it does dip here, it does dip a little bit, its bodies are respecting that reaccumulation. Then we trade through. That shouldn't be here. I just moved that from earlier. Then we trade through the low resistance highs, but then what happens here at 1040? We trade back into the original consolidation. And that was once bearish, right? But what was once bearish can now be bullish to go for the data high. This right here, that's understanding. Okay. That isn't, I don't want to say that's an elite level of understanding, but it pretty much is. Okay. That's an elite level of understanding about price delivery. I know it's a lot of drawings and stuff, and my charts absolutely do not look like this when I'm in front of them, but I'll usually have one concept on there that I'm looking at, but I'm always referencing old concepts and where we are in the framework of the buy model or the sell model. Okay. Because I need to have a bullish concept that overlaps with a bearish concept. Those are your highest probability entries. So G, my entry was here. My entry was like right off of this. It was like 13 or 13.5. It was right in there. So I did take a little bit of drawdown. Got out of it. Imbalance. Holding for the highs. And that's it. So we extended further. I was like, hey, we're probably going to go for the data high. And I had jammed my stop up pretty much to these highs. So like this pullback here ended up getting me out. So like the exit wasn't the greatest, but I figured we would go to the 40s today. But my entry was late because I slept in. That was my fault. And I really didn't know if this was going to be a run on highs to end up going lower. So I was like, you know what? I'm going to just lock in a profit. Whatever happens, happens. And then, so I ended up getting out. It was a decent trade. I mean, it wasn't crazy, but I'm slightly saddened that I'm still not in this. You know, but look, chat, I'm not always perfect, bro. I'm not always perfect. So that's what that looks like. The stop was right here at that low. Wait. Not this low, I'm sorry. This low. This low would have been too low. This here, again, was the first stage of accumulation. So I entered on that with a stop down here. Now, it shouldn't have been that wide, but what I was doing is I was going to allow the market to take that short-term low, and I would have suffered that drawdown, but I didn't think it would go down here. So what I'm saying is that drawdown I took here, I was anticipating possibly a run on that low, and we would have got something like that. Like if I can just draw a wick here like that, I would have sat through something like that. It wouldn't have stopped me out, but we kind of just formed equal lows there, which was a little strange to me, but I was like, fuck it. Those highs are more obvious than those lows. And that's still part of the buy model. So I'm still trading in the right direction. So the stop loss could have been a lot better, G, but you know, I'm going to be honest with you guys. And so, yeah, my entry was looser than it needed to be. But remember, the tighter your stop loss, the more likely you are going to get stopped out. So trading is discretionary. Do what you want. Because we were in the buy model, I assume you weren't scared about that 1 minute entry area imbalance to be disrespected? No. No. I saw that imbalance starting to get respected, and this was still, remember, I showed you this earlier. The 5 minute is here, but the 1 minute is here. So I'm trading inside of 1 minute reaccumulation. And look where price never goes to. Okay. Let's see if we can do this real quick. Let's take everything off because I'm getting a headache on how much is just going on. Let me see if we can do this real quick. Damn it. Okay, perfect. All right, so this is my point. Do you remember? I'll give you another stop loss placement idea. Okay, if you want one. Do you guys want one? I don't have to give it to you. Drop a 2 if you want a second stop loss placement idea. Near the end. That's what I'll end it on today. We're at 33. Man, we're probably not going to get the 40s until way later if we do. We're not going to do it on the stream probably. We are at our 1 p.m. macro though, so I don't know. We've rallied a lot today, so I don't know how much speed and volatility we would get at our 1 p.m. macro. What's my opinion? I think time, price, and context is my opinion. Trading at the right time in the right direction's ideal. But now, if you ask me what's better, timing the market or getting the right direction, I'd say getting the right direction. Being onside. You can be offside for a little bit, but if you're in the right direction, you won't be offside all that long. So, good question. Feeling philosophical today. All right, the reason I'm blocking out all this price action here is because I don't want you to look at anything in here except for the reaccumulation. Here and here. Okay? So again, we're not looking at any of this shit, but what we're analyzing is when price traded through it at 9.55. Do you see that? Oh, that's the wrong shit. That's the wrong thing. Yeah, this is the right one. Okay. See that up candle? I'm trying not to touch the price because then all that will come up. You see that up candle? And we traded up and through. Damn it. Up into through those two up candles there. Look where price never trades below. It does trade into the parameters of 6,014 down to 6,008. But look where it never gets to, 6,008. Wait a second. Hold on, John. I kind of see what you're saying. And I have an idea, but I need you to confirm it. I need you to confirm it because you just know all this shit. And I'm starting to get it, but I need you to say it. It's okay. I'll say it. All right, this is my opinion. Do you remember how what I said earlier about the first imbalance? of a price run. Like especially a reversal. Yes. You remember that first imbalance created in the opposing direction, meaning, for example, manipulation, and then this would be a buy, obviously. But this is the same inverted as well. What we're anticipating is either the bottom half or the majority of whatever to remain open, which is why a long time ago, when I gave you stop loss placement ideas, I told you about imbalances. I said your stop can go to the low end of the imbalance. But I said you cannot bitch in the Discord if you get stopped out before the big move, because that's a tight stop loss. Right? We shook on it. We had a verbal handshake. Remember? I also, back in the day, right? I gave you the mitigation stop loss. Multiple. I said, look, if you have a mitigation, your stop can go to the low, or it can go to the low end of the mitigation. Because why? Remember, we can cut concepts in half. I told you yesterday, every concept has a premium and discount. I told you that, did I not? Every concept has a premium and discount. Every concept, every single one. Mitigation, inverted mitigation, imbalance, inverted imbalance, all that shit, all of it. Up candles and down candles, premium and discount. Okay, ranges, premium and discount. So if you're trying to have a tighter stop, which I usually don't recommend, okay, but if you're trying to do that, your stop loss can go to the low end of the mitigation. So with that being said, what do you think the rules could be for the reaccumulation? If you're going to trade the reaccumulation, where can your stop go? At or just below the low end of the reaccumulation. Right, Naruto. So 6,008, that's the low end, right? My stop could go there. And that looks scary. It looks scary because you're like, oh shit, that's getting ready to stop me out. Does it stop you out? No. In futures, no. Now, if you're with like some dickhead ass broker that's going to rape the spreads on you, then oh yeah, you're definitely getting stopped out, because the broker's going to want that shit. But in futures, no. So why are you going to fear drawdown? You fear drawdown because you don't, and I'm not trying to talk down on you, okay? I'm kind of like speaking to my old self here. You are afraid of drawdown because you're either afraid of taking a loss, or of burning a combine, or burning a funded challenge, or whatever. And you don't know how to anticipate things like this, like a stop run or a reaccumulation. Okay, so we can take all this off back, all this back off again, because now it makes a little bit more sense, right? We traded multiple times in here, right? But what's the difference? Look, okay? A lot of people won't point this out to you. I will, okay? If you haven't noticed by now, I'm a little bit different than most educators. Okay, watch this. Pay the fuck attention, because we're not streaming tomorrow. Oh, that reminds me. Lee Bright is not going to stream tomorrow in the Discord until 5 p.m. Central, so 6 p.m. EST. Watch this. Watch this. Take notes, chat, because this is how I'm going to end it. I told you every concept has premium and discount. This reaccumulation on a 1 minute time frame has its own premium and discount. There's your levels right there. When you have a box, all you got to do is check the middle line. That will draw premium and discount levels for you. What's in the discount end of that reaccumulation? This imbalance here. What do you notice about that, though? There's two qualities here that I want you to pay attention to. Number one, this imbalance is in the discount end of the reaccumulation. Number two, the discount end of this imbalance was never traded into. We left the bottom half open. That's a bullish signature. So what could you anticipate about this imbalance here? Well, if we are going to run the highs and we got plenty of bullish signatures, then what is this right here? That is an imbalance that could be an add-on right before the big move, or that could be a stop loss placement. I could take my stop and jam it up to the low end of this imbalance because we're getting ready to run these highs. Dips into that imbalance. It does meander a little bit and then bam, runs for all those highs here. You see that? So chat, let me ask you this real quick before we hop off. I usually try to go a little bit longer on Wednesdays because I don't have a stream on Thursday, right? So I try to do a little bit extra. Drop a 3 if you learned something new today. Drop a 3 if you learned something new today. I mean, shit, dude. I give you a stop loss placement idea for the NCE. I gave you a new stop loss placement for imbalances I've already done. I give you a new stop loss placement for reaccumulation ideas. I gave you 2 expectations for the lowest imbalance formed in the opposing direction. And let me tell you something, chat. A lot of 3s. We got like 10, 7 or 8. I can't count 3s. Okay. I can't count fast anyways. It's things like this. These little nuances that most people will not tell you about. It's those things like this. Premium and discount of every concept. And yeah, it's going to be a lot of information. And I'm not saying to utilize it all, but I'm just saying if it's like, hey, bro, if we're at a reaccumulation, it shouldn't trade to the low end of it. It might, but if the bodies are respecting it, then it's bullish. So if you come into the chart and you're here, you're going, oh shit, man, it's about to run equal highs. I mean, I can't enter. I can't enter. The fuck you mean you can't enter? What do you mean? We're not at the highs yet. There's still opportunity. It may not be the highest RR, but there's still opportunity. Fuck you mean there's no opportunity? There is opportunity. You just don't know about them. And that's what I'm trying to tell you. One more difference I forgot to mention. This imbalance here, okay? I don't trust when they get traded into that third time. But you know what the difference is here? You know what the difference is here? The difference is these two were prior to trading above this high. So these are not reaccumulation ideas. That one is. That's the difference. Look at it. We did trade above that high here. Look, I get that. But remember what I told you earlier. The 5 minute, it's not the same. The 5 minute did not trade through it until here. And so look at that. That third time was the reaccumulation after we traded through it, not before. That's probably something new too. I'm willing to bet like a fucking $1,000 that nobody ever told you some shit like that. Maybe they have, which is cool. Nobody ever told me that shit. That's the difference. These were prior to that. That third one, you might not trust it a third time, but that's the difference, is that was after. Then we get our run. So that's probably the only way that I would trust something like this. So I got in a little bit early, but I trusted that we wouldn't trade through this mitigation. And so we definitely would not trade to this low down here. So that low down here, I'm giving the market room to breathe. That's why I did that. Okay, anyway, let me come back. The point I was saying a minute ago. Knowing these little nuances of what price should do, why it should do it. Okay? Oh, we did not make a new high of day yet on Dow. It looks like it, though. I probably won't touch this today. I probably won't touch this at all. Oh, is that what you were saying, Ricky? You said 250? We did get a new high of day? Look at that shit. That's nice. Our laggard finally caught up, huh? Because ES took that at 11 or 11 o'clock macro. Jordan's still here? We took the data high at our 11 o'clock macro. That's noteworthy. The high here was not met on Nasdaq until 12:45. So kind of a laggard play there. Is that what you were doing, Ricky? You were playing the laggard? Where's the signal, man? Where's the signal, dog? All right. This is kind of a... I said we're going to close it here. And I might keep going. I'm sorry. I lied. Bottom half. Respected, but like the low end of it left open. Then we get that run. So that is kind of awkward though, because of those low resistant lows there. That would have bothered me a lot to do that. But that's a higher time frame level of liquidity, so it would reach for that instead of that, and that makes sense. And those are old markups, so don't worry about that. Was like from Monday or something, so don't worry about that. But no, great job there. So anyway, if you combine the exercises that you were supposed to do, meaning, you know, you remember the vertical line and then looking at the left side on the right side, or if you're bearish, you could look at the buy side for the sell side and all that shit. You can continue those ideas, okay? But the difference now is you're adding a little bit more context, like data lows, data highs. You can add more context with literally, I gave you like 3 or 4 very new things, okay? Like the imbalances that should be left open or breakaway. Shit like if there's 2, trade the highest one, stop at the lowest one. You might kind of have that here. Shit like, I don't know why I keep saying it. I have a problem. Stuff like dividing your accumulation and reaccumulation in half and studying premium and discount ends of that, or, you know, studying price after the reaccumulation, like was traded through for the reaccumulation, excuse me. Old distribution becomes accumulation, right? Premium discount levels of that. Studying, you know, lowest buy, first stage, second stage, all that shit. This right here, between what I gave you today, between the stop loss placement video And between the market maker sell or the market maker models masterclass video, the 4M video, between those ideas, bro, you get that on lock and you will dominate markets. Okay. You'll do what I do and you'll stunt in low probability conditions. Bro, go look around Twitter. I usually don't tell you to do that because there are a bunch of fucking retards over there. Go look at it. Today's CPI sucked. ICT said today's low probability conditions. How? How? It's a market maker buy model. What do you mean? How? And that's why I've always said, bro, don't pay attention to what other people are doing because they don't know shit. They don't know. Everybody has an opinion. And you know what they say about that. What's an opinion worth, bro, if everybody has one? The market's this, the market's that. How about you trade what you want to and focus on that? Focus on the buy models or the sell models or the same shit that I gave you in the free beginner series. As long as you're trading after high resistant lows, trading in the direction of low resistant highs, you're fucking golden. You're fucking golden. And that's why I put that in there, the free beginner series, because the market maker models and all that shit, everything I gave you today, it's advanced stuff. Cutting concepts in half and next candle entries on higher time frames and all this shit, relative strength, multiple time frames. It's a lot. It's a lot. Right. But the very basic fundamental is trade in the direction of liquidity, wait for liquidity to be swept first. The market, if the market's going to go higher, it's going to go lower first. If you're going to long on the way down, not on the way up. Okay? So study these things I gave you. And if you want, you can go watch the Market Maker Models Masterclass again. I got to get those views up, baby. Got to get those views up. But no, that's going to be it, man. All right. You guys be... Ooh, look at that. We just got a little drop. We just got a little drop. I tell you what, it's hard for me to really tell you what I think the market's going to do today because Dow left us equal highs and then NQ left us these lows. I'd rather just go make a sandwich, to be honest, because I'm fucking starving and I am not willing to give back anything today. So this is starting to look like a sell model, isn't it? Isn't it? Is that what it's starting to look like, chat? Uh-oh. Uh-oh. What's that up there? On a five, not really seen on a 1 minute, but what's that up there on a 5 minute time frame? Starting to look like what? A breakaway imbalance. Now I'm not saying it is, but I'm saying that's what it's looking like. Oh, wait. But that's the fucking you know, that one thing that you gave in the free shit. Oh, you mean the 1 to 2, it's good for me, it's good for you, or whatever it is I said. Inversion, upper half left open, bottom half respected to go to equal lows. Where's your midline? Right there. Never reached into that midline. And that midline is also that old high too. Look at that shit. Original consolidation. Accumulation, I guess, to go higher. So I'd watch that. But again, I'm not trading this. That's what discourages me is Dow having those highs up here. Dow's our strongest index too. So that kind of bothers me for NQ. But I would still watch that though. So anyway, I could go all day, bro. Not every trade though is worth taking. Okay. Not everything is worth taking. That inversion looks good, but it's coming back kind of fast. So I don't know. And for that reason, I wouldn't short because of Dow. And I wouldn't long, or yeah, I wouldn't short NQ because of Dow. And I wouldn't long Dow because of the lows on NQ. And so with that, I'm going to go make a sandwich. I got bacon too. I got turkey bacon. So I'm about to fry the fuck out of that. All right. Y'all be good, man. We'll be here same time, same place on Friday, the 15th of November, dude. Oh my God, we're almost in December. Crazy shit, Jack. Crazy shit. All right, drop a like if you got some value today. See you guys on Friday. Don't do anything stupid. I'll see you then.
See these niggas be capping and lying, they really not like that. Nigga play like he won't get his life. Still hang with the killers and niggas in our black. Hell yeah, but we like that. Ayy, New Year, so we stacking for scat packs. Just hit a lick and pulled out from the Hellcat. I'm the smoke pressure, the bitch, you can smell that. Turn the 2-8 to a 3 with a scale at. Ayy, need bows, we gon' wrap it and mail that. Just put a 4 in the pop and then feel back. Giving them trouble, they like where they help at. These niggas pussy, they twat, they big cat, big racks all on his head and they kidnap. Ayy, no cap, this shit here, big fast, kicking in doors at the kickback, get back like it. Run the box, let me keep that. Ayy, 30 shots with 100, come with me. Wasn't proving no points, so we hit them with 60. Crib Street still screaming on IP Nancy. I come from the grove, but the knock niggas with me. Ayy, 600, that shit kinda in me. I jumped out the porch to the block in the trench. I'm rocking designer, this Glock in my brick. Hit the bitch from the back, nigga, buy some inches. 6 days and 6 nights, we was out on the mission. On the 7th, we seen them and caught them and flipped. Only right that we hit everybody that's with them. I've been causing hell ever since.